So every now and then you fly all the way to Canada, Toronto, to chop it up with Jay Rogers.
Great to be with you, man. Thank you.
Glad you made it.
Yeah.
So we had a chance to talk a little bit about a week ago, and you told me a little bit about your project. And I don't think I do it any justice, but what I think you're doing in insurance has never been done in crypto before. Is that correct?
Correct, yeah.
Talk a little bit about what you're doing with insurance.
Yeah, so in short, we are unlocking blue chip digital collateral, right? We're using life insurance as the base to create a source of collateral for people that
You're talking
hasn't
about whole
existed
life
before.
insurance that actually grows with time.
Well, really all forms of permanent life insurance. And yes, the original form of life insurance that was, at origin was whole life insurance. That was before term insurance, indexed universal life, VUL.
Well, what you're doing doesn't work with term, does it?
Correct.
Yeah, I didn't think so.
No, yeah, because it needs an asset base. So people don't understand, just from an educational standpoint, how is life insurance used? How do people leverage life insurance, right?
Like a bank.
Like a bank. So I'll give you an example. My background is from traditional financial companies. I started right out of college in 2010 at New York Life. I ended up at Mass Mutual eventually, just being a financial advisor and then a partner managing teams of financial advisors, selling life insurance to families. Eventually that scaled to institutions. And then eventually that pivoted to us working in an extremely niche marketplace where we were putting in force executive retention programs at nonprofits, specifically credit unions. It involved the institution acquiring a very large life insurance policy that was robust enough, with enough
Now, when
cash.
you say a large one, what numbers are you looking at?
I mean, we're looking at anywhere from $250,000 of annual premium to $2.5 million of annual premium, right?
And you're picking up many of these, right?
For 10 years, and they're pre-funded. So, I mean, we have policies that are $100 million policies funded up front. And these are credit unions, for those that don't know, they're nonprofit banks. They're owned by the members, as opposed to a for-profit bank owned by shareholders and having boards of directors that focus solely on profit. Credit unions are focused on distributing their yields to their membership in decreased capital loans or cost of loans and in other products that bring the value back to the membership. It's an expansive offering across the United States. I'm sure that Canada has something similar. And they have, just to give you the scale, credit unions in the United States have approximately $10 billion worth of life insurance assets just for executive benefit retention on their balance sheets. They have another $10 billion of what's called BOLI.
Whoa. Are you saying that one credit union has that much life insurance for their executives?
No. I'm saying all of the credit unions in all of the United States have lent $10 billion to the express purpose of acquiring these life insurance policies that do two things. They provide a non-taxable benefit to the executive in retirement, and they provide a repayment to the credit union upon the death of the executive. So if I can retain my CEO...
And we're all going to die, right?
Yeah. If I can retain my CEO in a way that leverages opportunity cost instead of accounting cost, well, I've saved a lot of bottom line on day one, and it's a much more lower barrier to entry product for these credit unions. So that's the traditional financial world that we've been operating in. My firm alone has put in force $1 billion of split dollar plans across the country.
Your firm, what's the firm are you talking about?
Infinio, right?
That's the current firm.
That is the current firm. Our firm originally
you have $1 billion worth of life insurance.
So we implemented $1 billion of traditional split dollar at Stearns Financial Group. I'll give you the full story here. Stearns Financial Group, our original plan was just implementing split dollar, okay? We were the firm that realized if somebody...
For anyone that doesn't understand what split dollar means, explain that.
Yeah, so split dollar is when a credit union lends the executive money to acquire a life insurance policy with two purposes. That's where the split comes in. Purpose number one is to make sure that the credit union's loan plus compounding interest is always paid back to the credit union at death. Purpose number two is to provide the executive a non-taxable benefit in retirement that they vest into so that it provides an incentive for them to stay until retirement. If they leave early, they lose the benefit, right? So it incentivizes them to stay and create...
Golden handcuff.
Yeah, it's much like a golden handcuff, exactly. what did we do that changed the game? We created a first of its kind securitized pool of life insurance products. I know it might not make sense, but right now, this is why what we've done is so revolutionary for blockchain. Because we started with traditional financial instrument. We started with a trust, a pooled trust of life insurance assets that had not existed before.
Now, are they off-chain or on-chain?
Off-chain. All of it
So
is
you've
off-chain.
got all these assets that are off-chain.
Yep, and right now we're at
And
about
then- and
700 million in assets under management in our...
Are you tokenizing them?
Not yet, right? So the Life Notes Trust is an off-chain traditional financial trust that we charge an AUM fee on. It enables the credit unions to get out earlier, and it enables the executives to come out of the risk-bearing position. So that they're not looking for risk in this product. They're looking to get a stable, reliable retirement benefit so that they can have what they need when they retire, right? And by pooling these assets, we introduce all of the benefits of traditional securitization, right? That you see with many assets across different asset classes. We've just introduced that to life insurance. So we're the first securitized pool of institutional life insurance at this scale. We're at about 700 million under management right now.
Okay, so you've got this trust that has $700 million worth of life insurance
Yep.
in it. How are you doing something with crypto that you're introducing crypto into this equation?
Exactly, yeah, it's a great question. So what we have done, and I want to make sure I do this in a way that tells the full story. We built the Life Notes Trust knowing in the end, the best use case for this was life insurance on chain. It was moving these assets on chain for transparency, ease of administration, and...
Now that's interesting. How are you going to put life insurance on chain? Because ultimately, it's an off-chain product inherently.
Yeah, so we have Lifecoin. So we're minting Lifecoin off of the back of the cash value, right? So what you do is, we've created our own tokenization engine. You tokenize your life insurance policy.
This Lifecoin, what blockchain is it on?
So right now it's on Provenance. So Prov Labs, we're working with Nuva Labs, right? You may have not heard with Provenance. So Provenance, the reason we worked with them is they were...
Low transaction fees?
Yeah, low transaction fees, but also they were the company that kind of backed the Figure.com. Do you know Figure? So Figure is the largest...
Actually, I've heard of Figure.
Figure is the largest real-world asset on chain.
Yeah.
Okay? They are probably getting close to 20 billion of HELOCs on chain. And this is the beauty here. This is why this wave of blockchain is so beautiful. We're out of this speculative bull run bear cycle, right? We're now into this has been adopted by the major institutions. We know this is coming. We know it's here to stay. It's a matter of doing this in a way that's going to marry compliance with traditional institutions.
All right, Jay. We've bored the fuck out of people right now.
Right.
What made you wake up one morning and say, you know what? I want to do this shit.
Yeah, so I learned what banks are doing with life insurance. What banks are doing with life insurance is they buy $100 million worth of life insurance. It's a yield-bearing asset on their portfolio, and they are able to pledge that block of collateral to go out and get a line of credit from another institution and then go invest the capital or lend to their members and do other things. So I have this stable asset growing over here while I have cash to go and do other things with, okay?
Well, the asset here, they're going out and borrowing against that, correct?
Yes, exactly.
Got it. And this asset would technically be your pool in this case.
So in this case, what I'm telling you is that what banks have done for decades is they've leveraged the collateral of their institutional life insurance to create ease of optionality in their other financial world, right? We're bringing that to other institutions and to retail users. The Life Notes Trust is the first best example
Irrevocable
use case
trust?
of that. Irrevocable trust. It's a
What kind of trust is it?
So it's a pass-through special purpose vehicle
Okay.
that's owned by the credit unions.
So it's a SPAC.
It's an SPV, not a SPAC.
SPV, okay.
Special purpose vehicle owned by the credit unions, and we are administering the trust, okay? But what we've been able to do is we've been able to take this block of collateral, go to a bank, and show them, hey, we can do the same thing with all of these individual policies. We can do the same thing with all these individual policies, and we can make the same collateral play, right? And we've already done this in the traditional world. So we took $100 million of our product, we went to a bank, we pledged that collateral, and we got a line of credit against that, and we were able to go out and invest that in very secure ways with collateral backing those investments to drive additional yield to pass through to the owners of the trust, which are the policyholders and the credit unions of the trust.
So you're literally basically getting people a higher yield because you're expanding the abilities to borrow against an asset.
Correct, exactly. So why does that matter for this conference? Why does that matter for blockchain? What we know is going to be possible in the future, and what JP Morgan knows, what Mass Mutual knows, what Bank of America knows, is all of this will be done on chain.
BlackRock.
Every asset.
Larry
BlackRock.
Fink said exactly that.
Yeah, of course. Jamie Dimon's getting there as well, right?
Shout out to the biggest idiot in the world.
So, look, as we move here, all of these assets will be moved on chain. And, believe it or not, whether it's Larry Fink, Jamie Dimon, or Donald Trump for that matter, they're unbelievably savvy in how and when they say what they say about these products, right? Because they're not just interested in when they start using it, how they start using it. They're interested in making sure that the compliance enables all of these assets to flood the market at that point. Right? Think flood the zone. Make it impossible for all of these nations to turn down, right? We're trying to work with the insurance carriers for the same purpose.
So on one side, you got insurance carriers. On the other side, you got lending institutions.
Yeah, but you gotta realize, what is a life insurance company? It's a hedge fund, and its asset is capital and life insurance liabilities, right? That's what it is. So Mass Mutual, New York Life, these companies have billions of dollars that they go out and invest.
So Jay, tell me what your vision is for the company. Where are you guys going to be a year, 18 months from now?
Yeah, my vision, 1, 3, 5 years from now, we will be the largest on-chain issuer of life insurance-backed tokens, Lifecoin, and whether it's Deathcoin or Afterlife Coin or whatever you want to call it, that is backed by the death benefit, right?
Deathcoin.
A little bit different, right?
Shout out to all those that are going to buy Deathcoin now.
Exactly, right?
By the way, I give it 3, 2, 1. Deathcoin, it's a new meme coin.
Yeah, exactly. There we go. Right? So, look, we're going to be the largest on-chain life insurance company. And the reason is what we enable people to do.
Nobody's doing
with
life
their
insurance
collateral.
on chain, are they?
No. People are starting to try to get into it, right? You have different companies. I know one of them's backed by Sam Altman that is doing on-chain Bitcoin-denominated life insurance, right? So you buy it in Bitcoin, your death benefits paid in Bitcoin, things like that. What we're doing is taking the traditional financial asset and minting Lifecoin off of the unbelievably stable. It's truly the best use case for a non-payment stablecoin is life insurance, right? And it's because it's guaranteed to go up in value. Why is life insurance better than real estate? Well, it compounds, but I know if the market turns, it doesn't go down in value. It may go up slightly less, but it's going up. And that's backed by the largest mutual companies in the United States,
yeah.
Right? I mean, this is as safe as it gets. Nothing is bulletproof, but it's as close as it gets.
So would you say that you're the king of on-chain life insurance?
Absolutely.
Jay Rogers, the king of on-chain life. What the fuck? On-chain life insurance. Thank you,
brother. Appreciate it.
All right.
Thank you so much.
I'm gonna step up. I want you to look right in the camera. Tell the audience 3 things you liked about this interview.
Great. Awesome,
and also
man.
leave where they can reach out to you.
Absolutely, yeah.
By the way, I don't know what you stabbed me with. Were you telling me to end it?
We're getting dripped on.
What happened?
Water. It's coming down. It's all right.
Were you telling me to end it?
Great things. Hey guys, my name is Jay Rogers. 3 things that I really liked about that interview. So number 1, I love the opportunity to tell the story from the beginning, right? People here trying to understand how have we been able to become a profitable, traditional financial institution at Infinio. It starts from the beginning. It starts before blockchain had blown up and became, so reliably a part of the economy, right? So I love being able to do that. I love being able to explain where we are now, where our fund is, the Life Notes Fund, and what we're doing within credit unions, how we're helping all of these institutions to take institutionally owned life insurance and add value, how we're allowing them to generate higher yield with the same asset through securitization. It's important that people understand that, and that's a great thing that we're able to do. And then I also love being able to think into the future and talk about what's happening with Infinio in the coming years. How are we taking the Life Notes Trust, moving the assets on chain, and adding value to the users, both our current institutional users, but also to the retail users to come? How are we going to add value to the marketplace? How are we going to add value to the carriers and to the advisors? That's a story that telling is important, and being clear on the safety and soundness of this asset class, the safety and soundness of moving these assets on chain. When people think blockchain, if they think risk, that's not good. It's not what they should think. If they think transparency, if they think mitigating risk, that's what we want them to see when we're looking at real world assets moving on chain like life insurance. And so that's the important thing. That's what the Life Notes Trust has done. That's what securitizing life insurance has done. And that's what Lifecoin will do in the marketplace for both institutional users as well as retail users. Really appreciate your time here. Thank you so much. My name's Jay Rogers. I'm the CEO of Infinio. And the best way to reach out to me is j.rogers@infinio.ai. Thanks so much, guys.